How's it going, YouTube, and welcome back to the channel. In this video I'm just going to do a breakdown of a trade I took this week on Euro Kiwi, resulting in 2.69%, but this is just going to be an example of utilizing supply and demand to build up a picture for taking a trade and hopefully give you an insight into how I personally do trade. So maybe you'll be able to introduce supply and demand into your own trading. Well, let's jump straight into the trade recap right now. We're starting on the daily and the higher time frame picture. We can see top left we have the daily chart. What I was looking at was this trend line break. Now I don't look to trade on a purely technical analysis perspective. What I do is just take into consideration what most people may be looking at. Well, we can see we've got this trend line break. What the majority of retail traders may be looking at is this trend line break and continuation. So they may be looking to take advantage of this new trend that is now being established and looking to just take a continuation like so. Well, what I'm looking at in my perspective is the fact that yes, we've broken it, but we've come into this area of supply. So what I'm going to be looking at is maybe this area as a possible area that we may pull back from and retest that trend line. I'm not looking to take a trade off that, I'm just using that as an inflection point that we may target that area. But also given the fact that the majority of retail traders are wrong, I'm looking to take the contrarian view. If most people would be looking at a trend line break, I'm going to be looking to build a case to take an opposing view of that. And as we can see, we've come up into an area of supply on the daily, and also the 4 hour, we have this area of supply like so. So if we just jump down into the H1, we can see we've tapped into this area of supply once, twice, 3 times, developing into this triple top formation. But also, how did we actually approach that area? Very correctively, within an ascending formation as well. So the way I interpret an ascending formation going into an area of supply is price decelerating and showing that there isn't actually momentum to the upside. And usually an ascending into an area of supply or a descending into an area of demand is usually indicative of a reversal. So I was looking to take advantage of that, depending on how the price react from that area of supply, and then look to take the first continuation. So I'm not looking to take a reversal and calling the top, I'm just seeing how price has reacted from that area of supply. Now we can see we've got this little trend line, we've broken that, and what I've done is hide the T&G confluences just for the sake of consideration of the privacy around the strategy, just for those who are subscribed to the Evolve platform. But for the sake of this video, if you do hear me speak about T&G confluences, it's just the name of the strategy that I use to execute. As you can see, we've got this nice push down, but we did close out with this wick. So what I was doing was waiting for further development and seeing what we would be setting up into. Now, as we set up and developed, just lining up to those T&G confluences, but also we set up for what I call a 5th wave continuation formation. Now, what that looks like is just a typical flag. But the reason I call it 5th wave is because I count this as a 1st wave, a 2nd wave, 3rd wave, 4th wave, and then looking to capitalize on that 5th wave to the downside. And as you can see here, we've got that. We've got the 1, we've got 2, we've got 3, we've got 4, and then looking to capitalize on the 4. So what I look at is this. I count this as A, B, so A to B, B to C, C to D, and then I look to get in on the E point. So also a double top as well within that. But for me, that's just an additional confluence. That's not what I'm trading solely on. The reason I took it was based on the T&G confluences. But as we can simply see, we've come up into an area of supply, we've convincingly reacted from it, and then we've set up for continuation into those T&G confluences. I got in on this high test candle right here. Nice strong momentum because it's closed on the low of the actual candle, and this is where I've entered. Ended up closing for 2.69%, and the reason I closed around here was based on a couple of factors. We're very close proximity to this area of demand, so only around 20 pips away. And once we had this sharp retrace, that's telling me that now buyers are pushing the market up. I wasn't looking to hold a deep pullback, especially in these current times that we're currently within. Obviously, the coronavirus pandemic, we're seeing a lot of volatile moves and misdirection. So therefore, I was just looking to capitalize on the move in itself. And also we can factor in that retest of that higher time frame trend line as well. So once we had that reaction around that area, I'm happy to close out the trade and then look for the next possibility. And the next possibility was actually around here, but I was unable to capitalize on that position just because it was out of hours and I was not at the chart at that point. So once we had this retrace right here, I tried my stop just above it for 2.69% and was taken out on that next candle. And as you can see, we had a lot of momentum come into the market around here. As you can see, that was the right decision to be making because all we could do is set up for a deeper continuation, all for the sake of a potential extra 2 or 1%. So for the stress of it, I'd rather take profit, especially in these current times, and then move on and look for the next opportunity. So that's the trade, and hopefully that's given you a good insight into how you can utilize trading between supply and demand. So literally just taking advantage of the range. As you can see, prices come into an area of supply, showing a good reaction. We look to capitalize on that continuation. First target being the next area of demand, albeit if it doesn't reach it and we have reaction, we look to close down that trade prior. Otherwise, we see how we develop going into that area of demand. And if we was to get something like this and we get a descending formation, just as I said, ascending into supply, if we get a descending into demand, I'd look for the exact same thing for a continuation to the upside from there. So just taking advantage of the range between areas of supply and demand. So if you did enjoy that video, just give it a thumbs up, give it a like, and also if you're new to the channel, just subscribe. And if you are interested in finding out more about this strategy and how you can utilize supply and demand, there is a link in the description if you do want to find out further information. But hopefully this is going to give you enough inspiration to go away and test it for yourself. Any questions, feel free to give me a shout. Otherwise, I will see you in the next video.